Okay, it's 8:49 on the 14th of July. I got into this long trade here on two contracts. As you can see here on the tick chart on the right, I have a 144 tick, a 1 minute, and a 432. This is 3 times the 144 tick. And we have multiple time frame divergence, bullish divergence right here. And now we're coming up. It's also volume divergence on this tick chart right here. I actually got in on that bar. I don't know why it's marking. Ninja tends to mark things on the wrong bar for some reason. And I should probably be getting out right here, at least out of one of these, but I'm really waiting for a break of this high. So I should probably take one off now, but I'm going to go ahead and hold and try to get through this area here. Okay, so you can see I've deleted all of the market geometry, but let's draw it now. So from high to find the next possible low. And you can see when we came down here, we actually broke through this auto line right here. We broke through it, and then we pulled back to the center line, middle line, came back down to the median line, pulled back to the upper median line, and then when we came back down to test this shadow line on bullish divergence. Okay, so we have bullish divergence. We have a climax bar. It's a climax churn followed by a strong churn bar. Okay, I almost got in right there, and it's also at yesterday's low, but I wanted to see some kind of a reaction. It just barely turned back up and it came back down. And when it came back down, it did so on volume divergence. So let's look at that tick chart now. So in the higher time frame tick chart, see we have bearish divergence right now, right here. So I'm going to go ahead and take one off right here.
Order pending.
This is where I'll take one off.
Order cancelled.
Because here we have bearish divergence. We have bearish divergence on the 1 minute. Bearish divergence on that 432 as well. So I think I better take one off right here. And then we'll let that other one ride to try to break this high.
Order filled.
Okay, there we go. So I got out of one at the pivot point after this churn bar, which is right after a weak climax churn. So a very good exit. I'm going to hold this one now and try to break that high. See if we can do that. It may want to retrace down here and then go to new highs. We'll have to see. Let's have a look at this larger time frame now. So it's right at the 50% retracement, and you can see we actually took that out here. So here we come down to the 50 on a really strong churn bar, which is also a major spike in the volume marked by that diamond there. But I wanted to see if maybe we could break that a little bit, get that volume divergence signal, and get the multiple time frame divergence. And of course we did here. You can see in all the selling dried up on those last two bars. So as it was coming down into that low, all the selling was drying up on the bullish divergence on this chart, this time frame, and then on the bullish divergence on this time frame as well. So as it was coming down on lower volume and then turn back up on increased volume, as you can see right here, you see this bar? This bar has increased volume to turn back up, and that's actually where I started to get back in, right there. So now it is finally rolling over a bit. We'll see if maybe it can stall out here and then turn back up. Now looking at the 15 minute, when we look at this, we have the bullish divergence right here, and then we get the strong push up. Now when it starts coming back down here, it's doing so on decreasing volume. You see that? This is a no supply couple of bars down in here. So once we get down into this area, there's a lot less supply left, and then it finds some support right here and turns back up. So here we've got the multiple time frame divergence. We've got divergence here, and we even have divergence here on the 5 minute. So a good place to get out. So I'm gonna go ahead and get out of this. Okay, so here we go. About to get filled.
Order filled.
There we go.
Cancelled.
So we made 66 to 29, and now it's gonna go to new highs to break that high here. So I got 63 ticks out of this trade with a 5-tick initial stop. So I was risking $100 on 2 contracts. So I made 1260. That's a 12.6 to 1 reward to risk. You don't have to be right a whole lot of times to be able to make money with a reward to risk like that. Okay, so that's what this is really all about, is fine-tuning those entries using multiple time frames, the volume, the divergence, the market geometry, and being able to hold for some of these larger moves, knowing when to expect to get one of these larger moves. And that's really what it's all about. So when we look at the 5-minute chart, we can see this initial big push up. We'd like to see something similar for this next push up, you see? And here we've only gotten about half of that. So now we're actually coming and breaking through that high. And this is what I should have been holding for. I got scared out here on this bar down. But really I should have been holding for right in here. And this is where I should be exiting right now. It's right here. Okay, so that's kind of a problem when you get scared out with a bar like that. But anyway, still a good trade. 12.6 to 1 is still pretty good. So pretty good example of multiple time frame divergence, the volume divergence, as we can see here. And then our first exit and then second exit by getting scared out, which was not a good exit at all when we were bouncing right off of that area. See, I didn't... every time I try to explain a trade while I'm in a trade, I don't manage it properly because I'm trying to explain while I'm trying to manage, and that's a big no-no. You've got to really concentrate on your trade management while you're in a trade. And here is what has since played out. So we did have that big climax bar on the 1 minute into the high, extreme spike in the relative volume. It was also an incredibly large amount of volume on that tick chart, which was also a churn bar and an extreme spike in the relative volume into that high. Just barely breaking above the previous high. We've turned down and then come back up to test that area on back-to-back weak climax churn bars. To end the move, we had a minor spike in the relative volume, which is also a churn bar in the relative density, that fat bar behind the relative volume. And now it's rolling back down. Okay, so that's a wrap for this video. Just wanted to show the multiple time frame divergence from an area and getting that risk to reward, or let's call it the reward to risk, since we do put the reward first. Getting that reward to risk as high as possible.